The Federal Reserve is expected to hold rates steady at its meeting this week. According to CME FedWatch, the probability of the target rate staying at its current level is just around 97%. We want to bring in Paul Gruenwald. He's S&P Global Ratings Global Chief Economist. Paul, it's great to have you here on set with us. So talk to us, you were just in Davos.
Correct.
And we heard from President Trump. He beamed in over at Davos. He was talking a lot about just the state of the macroeconomy right now, where things stand. I'm curious just from a Fed's perspective. Obviously, President Trump has been very vocal on what he wants to see done at the Fed. What are you expecting to hear from Powell and their assessment right now?
Right. Well, we think they're going to be on hold in January. The U.S. economy, contrary to some of the political discourse, is still running a bit hot. And the Fed is trying to land the economy. Services inflation is still sticky. Some of the data from late last year is actually coming in a bit stronger than we thought. Some of the retail for December, the nowcast from the Atlanta Fed is looking close to 3%. So I think the FOMC is going to be pretty comfortable with a hold in January.
Now, I've seen a lot of chatter from economists that it's probably going to be a pretty boring meeting with the holds, not much to look for from the policy statement. Are you viewing any type of surprises, or what do you want to get from this meeting? Yeah,
well, I think people are starting to question which direction the next move's going to be in, right? Because we still have sticky inflation, growth still a bit too high. We've got a new administration that wants to juice things up a bit. So, we were thinking before that the Fed was going to go one or two more this year. That's our base case. But if we, get some stimulus into the economy and things start to pick up from the policy side, then, the next one may not be down. That's not our baseline yet, but that's just kind of emerging into view.
Is that becoming a higher likelihood?
Yeah, I mean, it's not the baseline, but it's, if you just listen to where the current administration wants to go growth-wise, and they're not talking about landing, they're talking about stimulating the economy. So I think that's now got to be part of the conversation.
And we mentioned that you were just in Davos.
Yeah.
I'm curious what the topic of conversation was in Davos and how you can apply that to what we're seeing today when there's a lot of fears over AI, the dominance of the U.S. What takeaways?
Well, dominance of the U.S. was given. I think it was a very consistent theme that the U.S. continues to outperform the rest of the world. That was one. There was the official program, which was dominated by a lot of AI this year, right? Every possible angle, and I think it's going to be, sort of a decadal, slog through the economy with everyone looking at things, maybe some productivity gains, maybe a growth dividend down the line. But the thing that was off the agenda that everyone was talking about was obviously Trump 2.0. One of my takeaways talking with people in Davos was they kind of know Trump's business model, so they've built in some redundancy into their businesses. Maybe they're holding more inventory, maybe they're diversifying their supply lines. So they see it now as a cost of doing business almost for the US. As an economist, you kind of call that a deadweight loss, but I think they're less stressed out, and it's kind of a known unknown now what's coming. So there seem to be they're pretty sanguine and resigned that it's just going to be a little bit more expensive to do business with the U.S. in the next 4 years.
But it also sounds like that U.S. exceptionalism narrative is very much maybe still intact.
That's very much intact, and the dumping on Europe was also intact too. I mean, the Europeans are trying to get to a point where they can finance and scale some of their own innovation because right now they're effectively outsourcing it to us here in the U.S. So they want to sort of bring that on shore, which is interesting.
Well, is there a risk though if the Fed is too late to act here, and we do see the Fed go on hold not only at this meeting but at potentially the next meeting as well, being a little bit behind just in terms of the ramification that could have 6 to 12, 18 months from now?
Oh, you mean on the upside?
Yes.
If we get a pickup? Always a possibility, but again, financial conditions are pretty tight. We'd have to see a real juicing up of growth. A lot of the AI you mentioned before, that's going to come in very slowly because all the industries are working through that. I would put that as sort of a medium-term tailwind to growth, but probably the next 2 years, maybe not so much.
You mentioned productivity, and that could feed through into GDP. AI, obviously a big part of the productivity story. We had that Stargate announcement that was made, $500 billion, the promise of 100,000 jobs. Do you think Stargate can deliver on that?
Yeah, I'm not going to comment on this particular company, but the technology, people are looking at it everywhere. We're looking at supply chains. They're looking at manufacturing. They're looking at medical. They're looking at education. It seems to be improving everything everywhere. So again, people make the analogy with electricity, right? It took a couple of decades for electricity to get in to the economy. New stuff like, production lines and assembly lines were kind of invented on the back of that. So again, it's going to be an uplift. Where and when exactly it comes is a little bit open question, but certainly A lot of optimism, a lot of feeling that this is going to be a tailwind for many years to come, which makes life everywhere a lot easier. You get a big productivity boost, right?
Well, then, Paul, when you see that today's developments and headlines are really over the weekend when it comes to DeepSeek,
yeah, that was interesting.
That then speeds up that timeline, right? I guess, or like how are you?
Right. I mean, there's sort
that?
of some friendly competition there between the U.S. and the Chinese. The Chinese did this without the advanced chips, so it's going to be, and maybe it's a little less capable than the stuff on the U.S. side. But this kind of notion we're going to have this, new technology that can create things and help us optimize and higher productivity and everything. That's going to be a boost to everyone. But part of the race around AI has got some U.S.-Chinese competition elements to it as well.
Certainly do. All right, Paul, always great to have you.
Good to see you guys.
Much.
Yeah, thank you.